Check, check. Hi everyone, my name is Shamika Ford. I want to thank each of you for coming and watching this brief introduction to one of the greatest opportunities I've personally seen in many, many years. Let me start off by saying we are in one of the greatest transfers of wealth in our lifetime. The question for many of us to ask is, are we in a unique position to take advantage of this opportunity that will likely last only 2 to 3 years? In 3 years from now, many of you will be saying one of two things. I'm glad I took the opportunity, or I wish I did. Today's presentation is on generating massive passive income with private lending. I hope you get a huge amount of value from my short discussion. Let me ask you a question. What is the hardest thing to get access to right now in this credit frozen market? That's right, cash and credit. Let me ask you another question. With cash and credit, what can you find on sale? In fire sales at discounted prices and for pennies on the dollar, pretty much everywhere in America. Not just real estate, distressed real estate. Today we'll discuss how to earn high yields secured by safe real estate while you stay in control of your money and receive nice monthly payments. Let me share what private lending is not. It's not about stocks, it's not about bonds, it's not about investing on Wall Street where someone else makes the money, and it's not certificates of deposits, CDs, that are paying somewhere between 0 and 2% interest. Private lending refers to a private individual like you or me making a safe and secure loan to another individual, using safe and secure real estate as collateral. In this scenario, you are the bank. You make the rules. Your name is on the note and the deed of trust. In the game of Monopoly, who always wins? Is it the guy or girl who owns all the houses or the apartments? No, it's always the bank, because the bank makes the rules. They win almost 100% of the time. Private lending is being the bank, making the rules and making the money, and moving all the risk to others. In 1871, Baron Rothschild, the famous dynasty banking baron, said, "Buy real estate when there's blood in the street. Buy low and sell high." Remember, who always makes the rules? That's right, the bankers always make the rules. So you may ask, why haven't I heard of this? Well, Wall Street and the financial institutions don't make money from private lending. Remember the old saying, the rich get richer and the poor get poorer? Let me share just a few of the many benefits of private lending. First, your investment is secured by tangible real property with value. Second, safety. As long as there is value in the property, there is little risk. Your investment is secure. Great returns, in fact, amazing returns. People are familiar with real estate investing because real estate ownership is so common. Private lending is not. And best of all, predictable monthly payments. Who always gets paid first? Yes, that's right. The bank is always paid first. And if they don't pay, you get the property. And these are properties we'd always be happy with. Let me walk through a very common cookie-cutter opportunity. Let's assume we have a $500,000 house in one of the most desirable neighborhoods in the San Francisco Bay Area. Let's assume that the borrower needs $300,000 in the form of a loan. That gives us a 40% cushion known as equity. $200,000 worth of protective equity, or 40%. See, we lend no more than 60% combined LTV, loan to value. Now you may ask, why would someone be crazy to pay 12 to 15% plus in interest? Well, imagine this scenario. You're a real estate investor. You get a chance to buy a property worth $500,000 in today's market for only $250,000. That's buying property for half price. Remember, buy property when there's blood in the streets. To get this deal, you have only 5 days to close. The bank will only take cash. Do you really care if you pay 12% plus for 6 months? If you can close quickly ahead of your competition on this deal? Let me summarize exactly why borrowers will pay 12 to 15% plus. Immediacy. They need access to money much faster than conventional lenders can or will get it to them. Asset-based underwriting. Borrower qualifications typically are not as important as the value of the property. Timeliness. Conventional lenders don't like short-term financing. Improvement cost. Rehab loans can include the cost to improve the property, substantially improving equity. And traditional lenders limit the number of total loans an investor may have. So you're probably asking, how does this cash printing process work? Simple. It's just 5 steps. And remember, you're the bank. First, the borrower requests a loan from us and then submits all the necessary documents and information we need. Then, our broker, who's a professional licensed partner of ours, confirms the viability of the property and the borrower. The investor, possibly you, is introduced to the opportunity and then makes a commitment. Many times it's first come, first served, as the opportunities come and go pretty quickly. Then, an escrow is opened with a bonded and reputable escrow company, and all the paperwork and investor funds are submitted. Lastly, our broker services the loan, and the investor, maybe you, simply sits back and receives their monthly passive income check. Pretty simple. We do all the work, you get your money. What does it cost you, the investor? Unlike most financial institutions like Morgan Stanley, Goldman Sachs, etc., there are never ever any investor fees. You're probably thinking, this is incredible, but how do you, Henry and Shamika, make your money? Pretty simple. We collect a spread between what we collect from the borrower and what we pay you, the investor. We do all the work and give most of the profits to you, and we do this over and over again because we love to do it. We found a win-win situation. Our investors love these deals and they continue to invest with us over and over again, and because they're happy, they always refer their friends and colleagues to us, and that makes us happy. Here's a typical investment. We invest at 60% loan to value on a nice real estate property for 6 to 36 months, typically on the shorter side. We usually fund first deeds of trust, and we normally pay 6 to 8% plus interest to you, the investor, sometimes even more. We usually stick to non-owner occupied 1 to 4 unit residential properties, as I mentioned before, because they're the safest properties on the planet. We like to fund properties within a 100-mile radius of our office or our broker's office. The money is usually used for rehabs and flips, or refinance and hold. We found that these deals give us the massive profits right now in this incredible market. Many of our investors in the past have asked, how am I protected? Good question. So let's talk about the individuals and companies doing their job along the way that protect everybody. First, we use a large title company to insure the loan. Then, we use a professional escrow company to manage all the paperwork and manage the entire process. We get licensed appraisals to verify conservative value. We always use a licensed broker to make sure the documentation is complete and laws are followed and upheld. And lastly, we use a professional foreclosure company in the unfortunate event of foreclosure for the borrower. It's simple, it works, it provides win-win-win situations for everybody involved, and that's why we think this is just like printing money. Every investment has risk. and I'd like to address this so you understand. Almost all loans will have at least one late payment. You actually get paid more for that because of the loan penalties the borrower pays. A portion of these loans will turn in default, and some will even go into foreclosure. We're prepared for all of that, and most of the time we make more money in these cases. But very few will make it all the way to foreclosure auction. Why? Simple. There's just too much equity to lose by the borrower. The most important thing to look at in these deals is the value of the property. That's why you want us involved, because of how creative we can be in structuring these deals. Some people ask us about the key differences between private lending and, say, investing in stocks. Let me share just a few of the differences. Private lending is an incredible and quick cash flow generator. Stocks are not necessarily good for cash flow. With private lending, you get to benefit from using OPE, other people's experience. Stocks are based on demand and beyond your control. It's really predictability versus gambling. With private lending, you get to benefit from OPT, other people's time. Stocks, again, are totally based on demand. Private lending is all about passive, predictable income, and is relatively secure and provides high returns. The S&P historically provides much lower returns, and everybody has seen the volatility of the market and the effect it has on investors' income. One of the greatest benefits is the security. Private lending is backed by safe real estate with a huge cushion. Stocks have really no collateral and again are based on demand. Stocks can fall 10, 20, 50% in a single day, week, or month. A decrease in real estate usually takes years. Let me end by saying that private lending is still one of the relatively safest investments you can make, that also offers you a very high return, is backed by safe and secure real estate with a cushion, and most importantly, provides you with a fixed, consistent monthly cash flow. That starts immediately. Let me end by saying that private lending is still one of the relatively safest investments you can make, that also offers you a very high return, is backed by safe and secure real estate with a cushion, and most importantly, provides you with a fixed, consistent monthly cash flow. That starts immediately. I am finding incredible opportunities in this market, and I would like to finish by asking you if you might know someone who would like to take advantage of one of the greatest opportunities in our lifetime, taking very low risk, generating high returns without doing any work. This is one of those rare opportunities to participate in one of the greatest transfers of wealth in our lifetime. If you know someone, I'd love to spend more time discussing this rare and unique opportunity. Thank you for your time.